These perp decks on Solana is charging insanely cheap fees up to 6 times lower than Hyperliquid's Phoenix Trade. It is a fully on-chain perp deck built on Solana, and surprisingly, almost nobody is talking about it yet. So I started digging deeper, and what I found was pretty interesting. There is no token yet. This platform was backed by Paradigm and Toly himself. The team already built one of the biggest on-chain spot exchanges on Solana, the Phoenix Spot DEX. So naturally, this is an amazing opportunity to be early and farm a quote-unquote potential airdrop. Now in this video, I'll break down the full platform review, how to access Phoenix and how the trading works inside of the platform, and my personal airdrop farming strategy. Let us get into it. As a disclaimer, this is just personal opinions. None of this that I'm about to tell you is financial advice. I am not a financial advisor, so be responsible with your own investment. Thank you very much. Alright, so first thing first, what actually is Phoenix Trade and why should you care? Well, Phoenix Trade is a perpetual DEX built on Solana by Ellipsis Labs. They have been building on Solana natively for several years now. Their projects include SoFi AMM and Gavel, good names in the Solana ecosystem. Back in 2023, they launched the Phoenix Spot DEX, which became one of the top on-chain exchanges by volume and has now processed over $75 billion in cumulative trading. Now, they're using what they learned from Phoenix Spot and combining it with their own liquidity system from SoFi AMM to build a perpetual trading platform. What makes Phoenix different is the trading engine itself. Most perp dexes either use AMMs or rely on off-chain systems or CLOB for matching orders, like Hyperliquid's, for example, which uses CLOB and Hyperliquid's Vault. Phoenix uses a fully on-chain order book where matching and settlement happen directly on-chain in the same transaction, combined with their prop AMM model called the Spline liquidity. In simple explanation, in a traditional order book system, market makers have to manually place and adjust the limit buy or sell orders in the order book, which is very costly and time consuming. Even if it's just, seconds, but in perpetual trading, seconds delay already feel laggy. So Phoenix add their own prop AMM or spline liquidity that allows market makers to set their own preferred liquidity in regions. Phoenix recognizes those regions and materializes those regions into visible price levels when it builds the combined book. So as long as prices move within their region, market makers don't have to adjust their buy or sell orders. And if they have to adjust, they just need to change their region in just a few clicks. In simple terms, that means better execution, lower slippage, and a trading experience that feels closer to a centralized exchange. The team even demonstrated an $8 million trade with less than 1 basis point of price impact, which is honestly pretty impressive for an on-chain exchange. But to be honest, the thing that really caught my attention initially wasn't even the architecture, it was the fees. Now, the fees on Phoenix Trade is very competitive. Phoenix charges just 0.005% maker fees and 0.035% taker fees, compared to Hyperliquid, for example, which has a maker fees around 3 times higher. Compared to Binance Futures, that number is roughly 4 times higher. So for active traders using limit orders, that difference adds up very quickly. On Phoenix right now, you can trade several crypto pairs like Solana, Bitcoin, Ethereum, Hyperliquid, ZEC as well, Fartcoin, some of the meme coins, so very nice. Plus 24/7 markets like gold and crude oil, and they just added silver. The platform itself is also fully non-custodial, meaning you keep control of your own wallet and funds the entire time. Now, to be fair, Phoenix is still very early if you want to compare it to Hyperliquid, alright? Liquidity is smaller, volume is lower, just because it is earlier. Phoenix has around $1.7 million in TVL, while Hyperliquid is sitting at roughly $5 billion. Daily volume is also massively different, with Hyperliquid already processing billions in trading activity, while Phoenix is still in its early growth phase. That means liquidity is smaller and spreads can be wider on some pairs for now, but honestly, that's also exactly why some people are paying attention, including myself, because we are early. Right, so that's a simple review of what Phoenix is. Now, if you want to get to trading on the platform, here's a very simple guide. The first step is you need to get a referral code. Now you can take our own referral code link in the description, and also it's on the screen right now. This code allows for maximum of 10 referrals, but don't worry, I will update my referral code in the description in the comments if my referral is full. I will provide you guys with a brand new code, so no matter when you're watching this video, you always have fresh code so you can log in to Phoenix. This code gives you a 10% discount on your trading fees and give myself a 20% fee shares. Now, I cannot customize this code to share you guys more money because that's pretty much fixed in the platform. So no matter where you go, this is the best rate that you can get. But I promise you guys, if there is a better code out there for you to use to get better fees rebates, then I'm going to go ahead and leave it in the comments. Now that you have your referral code, the next thing you need to do is click on Connect Wallet. Now, you can connect several crypto wallets like MetaMask or Backpack or whatever it is that you want to use, your custodial wallet. Or you can also log in with your Google account or your email account. Let's say you want to log in with your Backpack wallet. After you've done so, then you need to enter the code. And remember to enter our code right here. It is case sensitive, so make sure of that. Click on Access Phoenix and you will get in. And just like that, you are now available to trade on Phoenix. The next thing you need to do is click on Deposit and add USDC into your wallet and make sure it's on Solana. Click on Portfolio to see your current positions, your collateral, and everything. Now, if you want to trade on this platform, first you need to select the pair. So go to the left side and just select the crypto pair or commodity pairs that you'd like to trade in. Myself, I would like to trade on Bitcoin because it is the one with the highest liquidity and the highest volume. That means there is less slippage, all right? And so I'm going to choose Bitcoin, and it gives you up to 20x in leverage for Bitcoin, up to 15 for SOL, and for more volatile pairs, it gives you up to 5 or just 10x, all right? So Bitcoin has the highest leverage out of all. Now, if you want to go long or short, just select it in the right side and select the cross or isolated mode. Now, let's say I want to go for cross, okay? So just click on short, and you can either click on limit or market orders. So for the limit, you can select a price range that you'd like to short. So let's say $78,200 is this range right here. And then you just select your order size, either in Bitcoin or USDC denomination. Let's say I want to short like $1,000 in USDC. So just select $1,000. This gives me an order leverage of only 1.7x because remember, I am using cross. So it's going to take up my entire funds. Now, if I want to go on isolated, then just click on isolated and choose my specific amount of collateral. Let's say 50 bucks. I only want to trade 50 bucks. All right. The order size, let's say I want to trade $1,000, then obviously the order leverage is going to be about 20x, maximum 20x, right? If I want to trade $500 in my order size using $50 in collateral, obviously it's going to be a 10x, right? So very simple, very straightforward. Just pick what you want and then click on post order. You can also click on take profit and stop loss, right? So very simple right here. And then just click on place order. As you can see, the fees on Phoenix is very cheap. The maker fee is not even 0.005%, it's 0.0045%. And the network fee is sponsored because they do have a trading event right now. If you want to choose market order, then the same thing, just click on market. This way, it will fill you with the latest price possible. Let's say I want to go for the same thing using 5x leverage, whatever it is. I'm just going to cancel this order because I don't think it's going to get in. And after that, all right, choose collateral $50, and I want my order size to be $500 exactly. So that is a 10x order leverage. I'm going to click on place order and look at that right here. Taker fee. Now it's a lot higher than maker fee because it's the same thing in any exchange. Maker fee is always cheaper because taker, you obviously do market order. But at the end of the day, it is still a lot cheaper than other exchanges like Hyperliquid, for example. All right. So let's just place order and see how fast this goes into. All right. Boom. Here we go. In just like a couple milliseconds, my order is filled. I am now in my position with a $50 margin, funding, and everything. Now, if you want to look at the order history, here's how you can look at it, and the funding history as well. Here's how much I paid in funding, and also the trade history, the fees that you have paid out. So for example, the last trade, the last chart that I just opened, I paid about 16 cents in fee for $500 in size. All right, so that's very cheap. After that, if you want to close the position, just click on the X right here and just click on limit close or market close. I'm going to market close everything and click on confirm. And as you can see, it's closed in just a milliseconds, very fast. And it's just like that. Very simple, very straightforward. The next thing that you can do is you can click on rewards to get your own referral code to earn a little bit of money on your friend's trading fees. Now, in order to get your own referral code, then you need to have a $10,000 in lifetime volume. Now, I know it sounds a lot, but it's not, because this $10,000 is your order size, basically. So it counts your leverage. So let's say if you want to hit $10,000 in trading volume, then you just need, let's say, like $500, and you use a maximum of 20x leverage. There we go. You get like $9,000 already. If you want to earn the airdrop of Phoenix, I will suggest you to get your referral code right now and share it to your friends. Finally, if you're done with trading on Phoenix, you can go ahead and click on withdraw. That will allow you to withdraw all of your money to your main account, which is the wallet that you connected Phoenix with. Okay, now obviously the reason why a lot of you guys watching this video isn't just about the fees, but about the quote-unquote airdrop. All right, so does Phoenix currently have a token? No. Is there a confirmed airdrop? Also no. Is there a rumored airdrops? Well, 50-50. Everything that I'm about to say here is speculation and not financial advice, but chances are they will have a token and plus an airdrop, because Ellipsis Lab has raised over $47 million from major investors like Paradigm and Han Ventures. Within that, about $20 million was raised to accelerate the development of Phoenix Trade and related DeFi products following Phoenix Spot Exchange's success. In crypto, when a project raises that much money, we would expect some kind of return. And most of the time, that usually means a token launch at some point. And to be honest, if they're looking to compete with Hyperliquid, who gave one of the biggest airdrop in any perp DEX crypto history, then an airdrop from Phoenix is probably required. Plus, why would you have a referral system? With that said, the co-founders, Eugene and Jerry, have publicly stated that they don't believe in bribing liquidity providers with token incentives. Instead, they want to build real markets that attract real traders organically through superior product design, tight spreads, and sustainable liquidity, not artificial farming or wash trading. So if there is an actual token airdrop, you need to be a real trader or liquidity provider and do not spam your trades, or you will be flagged as wash trading. And I also have to say that it's important to stay realistic, all right? Not every project needs a token, and if they do have a token, there is no guarantee that rewards will actually be worth it, because we've already seen people spend huge amounts of money and time to farm points, volumes, and ecosystem activities only to end up disappointed later. My strategy, and the only strategy that I found reasonable as of right now, is use Phoenix as a hedging platform. Right? Meaning you go long on Binance or Hyperliquid and whatever it is, and then take an opposite short positions on Phoenix and vice versa. Find a funding rate arbitrage opportunity, and that way you can earn a little bit of funding rates fees while earning Phoenix potential points. And do not close your orders too fast, all right? And don't spam your orders every day, all right? Just keep it open for as long as you can. And that's it for my video about Phoenix Trade and my thoughts on the Phoenix airdrop. There is no token yet, it's still growing, and so if you're watching this video, then you are very early, so make sure to use our referral code on the screen and in the description to get in on the Phoenix action very early, all right, and potentially be eligible for their future airdrops. Thank you so much for watching this video, and make sure to like and subscribe to CryptoNinjas to support the channel and for more content. I'll see you in the next one, all right? Daily out.